Greetings from the Charter School office. I'm Albert Bertram, the finance specialist for the office. So this sheet here is the review of the audited financial statements. This essentially takes the long audit and summarizes it into 4 pages, and then does a couple comparative calculations and other little things to help put the data in perspective. So this document is communication between myself and others in the office, and we're now bringing it to you to hopefully open dialogue. If there's anything you think should be added, omitted, or changed, if something is incorrect, let us know. We'll all get on the same page. So this also lets you compare year to year easier. Instead of having to dig through long audits, you can just look at 4 pages and compare them from year to year. So that's the idea behind it. So starting in the statement of net position, we'll notice our total assets 814. So I'll just show you where these are in the audit, so you could verify that they're from the right spot. So 814,998 is our total assets. If you go to the audit, we'll see the statement of net positions. There's 814,998. If any of these numbers are off by like a couple dollars, $1 or something, that's usually rounding error. I don't have the decimal points that are incorporated in the audit number. So if that ever happens, that's what's going on. That would be immaterial from an auditor's or accountant's perspective. So moving down, we'll see our ending net position. That's for the current year, or June 30th, 2014, I should say. And then our previous net position is June 30th, 2013. So that just lets you compare from year to year, and you'll see that Lifeskills increased its net position from last year. So that's good. As we move down to balance sheet, current assets, and now these are the general fund current assets, so it's important to know that. And then balance sheet, general fund, fund classification. So if we go back to the audit, 2 pages down is the balance sheet. So 1, 2, general fund again. That's only thing listed here, but some other schools have debt service funds and stuff like that. So if the Lifeskills ever does that, that's how we compare these. So these numbers, the cash equivalents, and then the non-spendable and unassigned fund balance at the bottom here as well. So if we go back to our sheet, we'll see these numbers here, the cash due from governmental units, and then we'll see our unassigned fund balance and our non-spendable fund balance. Now if you don't know what these means, unassigned essentially means amounts that are available for any purpose. These amounts are reported only in the general fund. There's no assigned fund balance, committed fund balance, or restricted fund balance for Lifeskills, but there's a non-spendable, amounts that cannot be spent because they are either not in spendable form or are legally or contractually required to remain intact. You'll notice that this is 5901. Usually non-spendable are associated with prepaids, which in this case it is 5901. You cannot spend what you've already spent, so that's how that works. Moving up, we have our general fund, which is a breakdown of the year activity basically. We have the beginning fund balance, revenues, expenditures, other financing sources, which that is positive, and it's over 100,000, so we'll discuss that in a few minutes. Our net change, and then our ending general fund balance. So you'll see that the academy increased from last year to this year. Excuse me. So below that we have a couple calculations. We have general fund, which is ending general fund divided by revenues. General fund, which is ending general fund, divided by, or subtract restricted. So if there was a restricted amount down here for debt service, it would subtract that first and then do the calculation. There's no amount down there, that's why these are the same. And we have a general fund divided by expenditures, ending general fund divided by expenditures, and then ending general fund divided by beginning general fund. Now if this number is above 100%, there was a positive change in fund balance, which we had here, which is why this is above 100. If it was a negative net change, then we would see that below 100%. So that's what that is. As we move down the sheet, this section summarizes the page 4 written information, which we'll show that in a few minutes as well. Notes payable is usually associated with state aid notes or short-term borrowing. Long-term debt is bonded debt or other type of long-term debt. Capital and operating leases includes the lease amount for Lifeskills. This is the building lease. So management fees takes the management fees, and again, this is all a summary of what's detailed on page 4. This percentage just takes the management fees and then divides it by the total state aid on the next sheet. And then this number takes the management fees and divides it by the fall 2013 count, which is the corresponding fall count for this fiscal year. So below that we have our square footage of 12,000. If this is inaccurate, let us know. Myself and the field reps went and got all these, I think last year or the year before, so if anything's changed, we try to update them as buildings are added, but if there's any difference or anything, let us know. Taking that square footage, we come over here to the square footage comparison, and we have revenues per square foot, which takes the total revenues divided by the square footage. And then expenses, same thing. Difference, you'll notice that's a negative because that other financing sources transfer in is what kept the general fund net change positive this year, but we'll get into that on the next page. And then payment per square foot takes the lease amount up here and then divides that by the square footage, and that's how this number came to. So going back over here, we have operations and maintenance per square foot. This takes the operations and maintenance number on the next page and then divides it by the square footage. And then square footage divided by fall count takes this number, divides it by that fall 2013 count. So moving on to page 3, the percentage comparison page, we'll see our 2014, June 30th, 2014 numbers, our June 30th, 2013 numbers, and then the difference between the two. So this lets you compare year to year really well. And then this is a more detailed breakdown than that little box on page 1 up in the upper right hand corner. So as we move down, we'll see that the total revenues for the 2014 year, is 1.52 million in revenues and 1.57 in expenditures. So Lifeskills, would have had a negative net change except for this other financing uses. So in order to figure out what that is and to help explain that, we'll go back to the audit. We go to page 28 of the PDF, which is 26 of the audit, and we'll see that operating transfer of 107,504 consists of county special millage tax, which are funds passed through to local school districts in the county of Oakland. So that's where that money came from, just so we know. Now, if we didn't know what that classification is, operating transfer, we could go to the county manual. I put this in a Word document, come up here, push find, then come back over here, type in whatever you're looking for, and then make sure you're clicking results. When you push enter, this should let you move through the document and find that in the document. So then you could come here, read that incoming transfers and other transactions are cash or receivables that decrease an asset or increase the liability of another governmental unit. The most common examples are transfers from another school district or transfers from another fund. So that's just if you want to know what the definition of, that's how a quick way to figure things out. So going back to our sheet, we'll notice our net change should be the same as that box on page 1 on the upper right here. Again, this is 2013, 2014. So here's our ending general fund balance. As we move down, we'll see our original budget, our final budget, and our actual. This lets us compare those three things really quickly. This just shows the difference between the actual and the final budget, and then this is a percent change. And then this reminder here, I don't know if this will show up on your sheet, but this helps remind people in the office that the original budget is due July 1, which is well before the school year, and things change, so that's why that number could be drastically different from the final budget. So it's important to remember that. Right here, these calculations from 2012, 2013, 2014 take the instruction from up. If we go back up here, the total instruction, and then divides that by the total revenues, and then calculates it as a percentage. And then so it was 30, 25, and now up to 38. So that's just comparison from year to year. This right here is revenues divided by a fall 2013 count, that same count, and then expenditures divided by that amount, and then the difference. So that's just another calculation. As we move into the third page, we'll see the enrollment numbers. These numbers are all derived from SEPI. So if there's any issue with those, that's from SEPI. This number, however, is the number received via Epicenter, the DS4061 number that's unaudited. I haven't updated with the audited numbers because I've been doing all these videos. So as we move over to this column, this is the percent change from each count date. So from one count to the next count. So that's just to help show the trend. And then down here we have a visual display of the numbers, just to help those who are graphical, visual people. So as we move down, we have the free and reduced lunch counts, which are also from SEPI. And then over here we have the percent free and reduced lunch calculated with the corresponding fall count. So that's what these numbers are. And then again, we have a graphical display. Now moving into the page 4 information, this is all the detailed stuff that I said was summarized on page 1 in those 4 boxes, well 2 boxes for life skills. So here's the debt information, which talks about the operating lease, the management company information. There was no findings, which is good. And then this BMCC notes are just any other thing that's not specific to those individual areas. I just wrote that the contract is set to expire June 30th, 2015, and the operating transfer that I already showed you in the audit, that's on page 26 of the audit, but 28 of the PDF. So as we move down here, this is reviewed. My contact information is albertb@bmcc.edu if anyone has any questions. I hope you got something out of this. Thanks for all you do for the children of Michigan, and have a good one. Take care. Stay warm. Bye.